Read through the lines for us.
Well, this is nothing particularly new from Loretta Mester, who said this basically the same things a couple of weeks ago. But the context is everything here, because we've seen a number of Fed officials, as they get close to the blackout period, staking out their positions. And she just reminds everyone that perhaps the most hawkish of all of the Open Market Committee members now thinks that perhaps they can wait in December and see what happens with the economy. She said, as she has said before, that there has been discernible progress on inflation and a broad tightening of financial conditions. The Fed has to be nimble, but they are, as you said, Shonali, in a good place to evaluate what happens with the incoming data.
Mike, what do you think when it comes to the Fed officials right now is going through their heads with any fresh comments, especially when, they can see what's going on. They can see the market reaction to the commentary from Governor Waller, for example, earlier this week, when Mester's keeping that possibility for rates rising in the future still on the table.
Well, you have to put it, I guess, as Shonali did, reading between the lines, because they aren't saying explicitly, but basically they're telling the markets that they think they're done. They leave open the possibility of raising rates further if inflation starts to go back up. But right now, the forecasts for the PCE inflation report tomorrow and the CPI next week, or week after next rather, are that it's going to continue to fall. So for right now, they're signaling that they're done, and the markets are taking that as a sign that rate cuts are coming. Fed may have to push back on that sometime after their next meeting.
Well, let's be a little more specific on her comments. She said that they're in a good place, well calibrated, she says, to ensure that inflation is on a timely path back to 2%. How dovish does the market take a note like that?
Well, they're going to take it dovishly because she has been the biggest hawk. And she's now saying basically that we can wait and watch and see what happens with the data that comes in. We don't have to raise rates automatically now. Tom Barkin earlier today from Richmond said that the Fed could wait and see what happens. If inflation comes down, great, but leave on the table the idea of a rate increase if it doesn't.
Mike, just a quick reminder to our audience. You talked a little bit about Mester's policy leanings and a vocal supporter of boosting interest rates over the past couple of years. She is due to step down as the president of the Cleveland Fed heading into next year?
She'll be stepping down in June of next year. She reaches the mandatory retirement age. The Cleveland Fed has a search on for a new president. And by the way, they said that you're welcome to apply if you'd like. Just send them a note. I'm serious. They actually did say that. Anybody's welcome to apply if you want to send them a note. We don't know what kind of person they will get to replace her, whether they'll be as hawkish as she is, but it will be an interesting process to follow. We also have St. Louis Fed open still.